Hi traders, this is Andrew Masters from FIBO Group and welcome to my weekly report. Well, this week promises to show some action as key statistics hit the market from all parts of the globe. Monday will kick off the week slowly as data from Germany, such as the Producer Price Index, and from Canada, the wholesale sales numbers, are unlikely to make any headwind in the market. On Tuesday, we will see a different story, with key numbers out of China and the US in the first half of the day, and quarterly GDP numbers and industrial production figures from China will hit the market. GDP has been on the up in China, rising from 1.8% in the first quarter of the year to 2% last quarter, which shows the Chinese economy may still be on track. A little later will be the release of industrial production figures, which were a little disappointing last month, coming in at 6.9% against the previous month of 9%. This drop is a worrying sign, and another poor number may well put some pressure on the Australian dollar, as any slowdown in China will filter through to the Australian economy. In late afternoon trade, we will see the release of existing home sales from the US. This figure came in at minus 1.8% last month, which had some questioning the so-called recovery of the US economy. Traders will be looking for a better number this time round. Wednesday is by far the highlight of the week, with key numbers from Australia, Great Britain, the US and Canada to hit the market. First up is the CPI from Australia, which came in at 3% last month and shows consumers are still willing to part with their money. Most analysts expect a similar number this time round, and any surprises could move the Aussie dollar. Next up will be the Bank of England minutes, where traders will be looking for signs on a direction for the UK economy and if in fact there is any chance of an interest rate rise in the near future. The all-important CPI index from the US will hit the market in the afternoon, and this may show whether there's a comeback in the US economy is for real or maybe just temporary. Last month, we had a figure of 1.7%, so anything higher may boost the case for a rate rise and as well lift the greenback. Last but not least will be the release of the interest rate decision from the Bank of Canada. We don't expect any changes in the rate from 1%, but the following statement from the bank may prove crucial as traders look for confirmation of a recovering Canadian economy. Thursday will see the release of the retail sales number from the UK, which has risen from 3% in June to 3.9% last month. Traders will be hoping for an even higher number this time round, which should give a much-needed boost to the British pound. Later in the day, the US jobless number claims will come out, which is a key indicator of the US labour market. The number has been on the decline recently, and another positive number should boost the greenback. To round off the week, we will see the release of the Consumer Confidence Index from Germany, which has been on the decline recently. This is a worrying sign for the German economy and may indicate the German economy is in retraction. A disappointing number could really pressure the euro. Later in the day, we will see the release of the latest GDP numbers from the UK. This has been number hovering around 0.8 since the start of the year, rising to 0.9% last month. Traders will be hoping for a higher reading to finish off the week and hopefully a positive end to the week for the pound. That's all from me at FIBO Group, and I'll see you all next week.